Hello everyone, and welcome to Nova Real Estate Solutions. I'm Dwight Morris, a seniors real estate specialist with Innovation Properties, serving Fairfax, Loudoun, and Prince William counties here in Northern Virginia. As I work with clients nearing or in retirement, a common theme emerges: the desire for reliable income streams that go beyond traditional pensions, Social Security, or a volatile stock market. That's why today I'm exploring a powerful strategy, real estate investment, to generate cash flow. I'm going to explore how real estate investment can be a cornerstone of your retirement finances, offering stability and growth that complements your existing portfolio. I'll discuss various investment avenues, their pros and cons for seniors, and how to approach real estate investing in a way that truly enhances your retirement years. So let's get started. So why should real estate even be on your radar for retirement income, especially if you spent years focused on stocks and bonds? Well, I can think of at least 5 reasons. Reason number 1, steady cash flow. Well-selected real estate assets can provide consistent, predictable monthly income, supplementing or even replacing traditional retirement distributions. Reason number 2, it's an inflation hedge. As the cost of living rises, so too typically do property values and rental rates, helping to preserve your purchasing power. Reason number 3, real estate is a tangible asset. Unlike abstract shares or funds, real estate is a physical, tangible asset you can see and understand, offering a sense of security for many investors. Number 4, portfolio diversification. Real estate often behaves differently than the stock market, providing a valuable diversification tool that can reduce overall portfolio risks. And finally, reason number 5, there is asset appreciation. Beyond the income stream, real estate typically appreciates in value over time, contributing to your overall wealth. The key, particularly for seniors, is to find strategies that align with your desire for income without demanding excessive time or physical involvement. Let's explore some of the most suitable options. The first strategy is direct rental property ownership. This is the classic approach, buying a physical property and renting it. While it can be hands-on, there are ways to make it much more passive. Let's look at some of the reasons this approach can work well for retirees. First, you have maximum control. You retain full decision-making power over the property, its tenants, and financial matters. Second, real income flows directly to you, providing a tangible income stream. There are also significant tax advantages. You can often take advantage of deductions for mortgage interest, property taxes, operating expenses, and very importantly, depreciation, which is a non-cash expense that can offset taxable income. There's mortgage paydown and equity buildup. Your tenants' rent payments help pay down the mortgage, steadily building your equity in the property. If handled properly, your tenants buy you a house. And finally, you directly benefit from a long-term increase in the property's value. Now, while direct ownership offers a great deal of control and potential, it's not without its challenges. Let's talk about the potential drawbacks you need to consider. One big drawback for many retirees is that your time and effort are involved. Being an active landlord can be demanding, involving tenant screening, maintenance calls, rent collection, and potential legal issues. This is often not ideal for someone seeking a relaxed retirement. Second, it's capital intensive, requiring a substantial upfront investment for a down payment and closing costs, and a cash reserve for unexpected repairs or vacancies. Real estate offers less liquidity than some other investments. Selling a property to access your capital can take several months, so it's a bit harder to access your cash quickly. Then there's periodic vacancy risk. No tenants means no rental income, but expenses like mortgage, taxes, and insurance continue. There are periodic market fluctuations. While generally appreciating long-term, property values can experience short-term dips. Of course, this is true of stocks and bonds as well. So as you can see, the active management aspect can be a real negative for many seniors. But that doesn't mean you have to abandon this strategy entirely. In fact, there's a simple solution that transforms this approach into a truly passive income stream. Hiring a professional property manager is how you make direct ownership work for a senior's lifestyle. By hiring a professional property management company, you offload virtually all of the day-to-day responsibilities. They handle tenant screening, lease agreements, rent collection, maintenance coordination, often with their own network of vetted contractors, and even eviction proceedings. While they charge a percentage of the monthly rent, typically 8 to 12%, this investment is often well worth the peace of mind and time savings, transforming direct ownership into a truly passive income stream. For example, one of my current clients, a couple in their 70s who I'll call John and Susan, perfectly illustrate this point. Through my property management company, Acadia Park Property Management, I manage their 3 rental properties here in Northern Virginia, 2 of which I help them purchase. The rental income from these properties now comfortably covers all of their monthly living expenses. This allows their entire stock portfolio to remain untouched, continuing to grow and providing a significant safety net. Their plan is to eventually pass these income-producing properties directly to their children, creating a lasting legacy. In Fairfax, Loudoun, and Prince William counties, there's strong rental demand for both single-family homes and townhomes, making them attractive for rental investment. For seniors who want the income and diversification benefits of real estate without any direct property management, real estate investment trusts are an excellent solution. And what are real estate investment trusts? Imagine a company that owns, operates, and finances a portfolio of income-producing real estate, like apartment buildings, shopping centers, office buildings, data centers, or even self-storage facilities. You buy shares in this company, just like buying shares of stock in any public company. So let's examine some of the positives for seniors in this type of investment. First, real estate investment trusts offer truly passive income. You simply buy shares. There are absolutely no landlord responsibilities, no maintenance calls, and no tenants to manage. They generally offer high, consistent dividends. Real estate investment trusts are legally required to distribute at least 90% of their taxable income to shareholders annually. This translates into reliable, often high-yield dividend payments, a fantastic source of passive income for retirees. Your funds remain liquid. Unlike owning physical property, REITs shares are traded on major stock exchanges. You can buy or sell them quickly, just like stocks, offering significant flexibility. They offer diversification within real estate. By investing in a single real estate investment trust, you gain exposure to a diversified portfolio of properties across different sectors, including residential, commercial, industrial, and healthcare, spreading your risk. There's no real barrier of entry. You can invest in real estate investment trusts with relatively small amounts of capital, making them accessible to a wider range of investors compared to buying an entire property. And they are professionally managed. The underlying properties are managed by experienced real estate professionals employed by the real estate trust, removing any operational burden from you. These benefits make real estate investment trusts a very attractive option, but it's important to be aware of the other side of the coin. Here are some potential downsides to keep in mind. First is market volatility. Since they trade on stock exchanges, real estate investment trusts can be subject to broader stock market fluctuations, even if the underlying real estate is stable. You have less direct control. You have no say in the individual properties or management decisions of the trust. While generous, dividends are typically taxed as ordinary income rather than qualified dividend, which could have different tax implications depending on your income bracket. And finally, your appreciation is indirect. You benefit from the appreciation of the underlying properties through the increase in the trust's share price, not directly from individual property value increases. Real estate investment trusts are a fantastic way to generate a real estate income stream that feels much like a traditional stock dividend, but with the added benefits of real estate diversification. Our third strategy for seniors is real estate crowdfunding and syndications. This is a more modern approach that leverages pooled capital for larger professionally managed real estate projects. These platforms or partnerships allow multiple investors to pool their funds to invest in large-scale real estate ventures, such as the development of new apartment complexes, commercial properties, or even acquiring large portfolios of single-family rentals. A professional sponsor or developer manages the entire project from acquisition to disposition. Let's break down some of the key advantages of this approach, especially for retirees looking to diversify their income streams. You invest passively and typically receive regular distributions from rental income and/or profits when the property is sold. Typically, you have access to larger institutional grade deals. Crowdfunding and syndications open the door to projects that would be far too expensive or complex for an individual investor to pursue alone. You can diversify your real estate portfolio by investing in multiple projects across different property types and locations with relatively small allocations to each. The entire investment is managed by experienced real estate developers and operators, freeing you from any operational responsibilities. Syndications can lead to potentially higher returns because these deals are larger and professionally managed. They can sometimes offer higher targeted returns than publicly traded real estate investment trusts, though with higher risk. These investments offer a relatively lower entry point. While generally higher than real estate investment trusts, the minimum investment is typically much lower than purchasing an entire property yourself. This sounds like a fantastic way to get involved in large-scale projects without the hassle. However, this strategy does come with its own set of risks and considerations that are especially important for retirees. Illiquidity is a major factor. Your investment is typically locked up for the duration of the project, which can be several years, sometimes 3 to 7 years or more, depending upon the size of the project. Accessing your capital quickly is usually not possible. There's higher risk than in real estate investment trusts or diversified mutual funds, since they are often tied to the performance of specific projects and the competence of the sponsor. Due diligence to the sponsor is crucial. Many of the more lucrative or complex syndications are only open to accredited investors, meeting specific income or net worth thresholds. However, there are platforms for non-accredited investors. And as a passive investor, you have no direct control over the project's management or its decisions. Crowdfunding and syndications can be a great fit for seniors who have a portion of their portfolio they can afford to tie up for a longer period and are comfortable with a higher risk profile for potentially higher returns. As you weigh these strategies for building retirement income in real estate, keep these critical considerations in mind. First, your risk tolerance. Be honest with yourself. How comfortable are you with potential fluctuations in value or income? Active landlord roles carry operational risk. Real estate investment trusts have market risk. Syndications have project-specific risks. Next, your liquidity needs. How much of your retirement capital do you need readily accessible? If you anticipate needing cash quickly for medical expenses or emergencies, heavily illiquid investments may not be appropriate. Consider the tax implication. Each strategy has different tax treatments for income and capital gains. Income from rental properties and real estate investment trusts will be taxable, but deductions and depreciation can play a role. Always consult with a qualified tax professional to understand how these investments fit into your overall tax strategy. Consider the time horizon. Real estate generally performs best as a long-term investment. Consider your expected lifespan and how long you plan to hold the investment. And finally, think about estate planning integration. How will these real estate investments integrate into your overall estate plan? Passive investments, like real estate investment trust shares, might be simpler to transfer than a physical property or a syndication interest. Remember, the goal is to build a diversified income stream that supports your retirement lifestyle without creating unnecessary stress. You don't have to navigate this complex landscape alone. Real estate offers compelling opportunities to build robust, diversified retirement income streams, moving beyond the traditional stock market to create a more secure financial future. Whether you're looking for hands-off passive income or open to some strategic investment, there's a real estate investment strategy that can align with your goals in Virginia. As a seniors real estate specialist and a certified investor agent specialist, I specialize in helping seniors in Fairfax, Loudoun, and Prince William counties understand these options, evaluate local market opportunities, and connect with the right professionals, from property managers to tax advisors and real estate attorneys. My expertise can guide you in making informed decisions about how real estate can significantly enhance your retirement income. Now, if you have questions about exploring real estate investments for your retirement, or if you're ready to discuss specific opportunities in Northern Virginia, please don't hesitate to reach out to me directly. My contact information is readily available in the video description below. And for more valuable insights on real estate retirement planning and all aspects of senior living, be sure to subscribe to this channel. I'm here to be your trusted resource. And if you found this information helpful, please hit the like button before you go. Thanks for watching, and I look forward to helping you build a financially secure and fulfilling retirement.